Alrighty, welcome back, traders. This is going to be obviously the August 2020 recap. Ended up being pretty good month. I wasn't expecting much out of it. As you can kind of see right off the bat, if you look at all the days, I really didn't have any massive days besides one. Right, I did have this big day on the 25th, which we will talk about. But all the other days, it was just 1 to 2, maybe 3K at the most days. It wasn't any multiple 10K days or 8K days like I've had in the previous months where we were much more busy. The market has definitely shifted, definitely changed in August. And really, if it wasn't for this one big day, which again I'll go over, this month would have been half of what it was, and it still would have been a great month, right? Still would have been one of my better months, but it wouldn't have been what the last few months have been in the market. And so that's something I recognized pretty much very quickly in the first couple weeks. And but like always, we're just gonna go through every trade, and I'll kind of talk about just the best and the worst. First one is ZVO. This was actually my biggest loss of the month, of what is it, $925. Some tickers that I run into and you'll run into that fit the pattern of what you look for, but in real time when you trade them, they just do not act like you want at all. And so if we go into the intraday here, we'll actually looking at the candle here. Of course, like I always look for multiple extended green days, and I was actually looking short on the 4th. So this, I think it was actually the 5th. I think the date might have been wrong on this chart here, but I was looking at this green day, the last green day it had before the red day. I did miss this red day after kind of being too emotionally involved with this ticker on the day I lost on it. But I believe I do have my trades here. Yeah, so this was at I took this trade at Interactive Brokers, so I generally take pictures of my own entries and exits on Stockers Trade. But as you can see here, with the previous close was like 609, and we were gapping down, and so I get short, and I'm expecting an overextended gap down. And you can actually see that right here. You see this little gap down. That's at this exact same spot, and I'm just going through the motions. I think it's an average, typical overextending gap down play. But quickly, after a few minutes, it isn't that at all. And I want to try to cut it. This thing was, even though it looks liquid, it was not. There were a lot of air pockets. There were a lot of areas where, it just quickly sped up over 5 to 10 cents. And now all of a sudden, I'm taking, it never broke my initial risk. My initial risk was the previous, I think, day high, which was, it was a little bit higher. But after so much time of it holding red and then going back green, I wanted out, and so now this is where my trade plan is in between two risk levels. It's in one that I missed, it didn't get filled on, but then we're also underneath the ultimate risk, which is the previous day's high. But because we went red, or because we went back green, I'm just thinking all I want to do is get out. This isn't working, and so I gave it some time to come back red after missing my fill. But clearly, I did cover in this mid sideways action. I was like, this is not what I want to see. But then, unfortunately, again, we actually fail. We go back red. So I'm like, damn it, Kyle. Like, here we go again. Like, I have to re-short. So I do. We go back to lows. Then we go back green again. And so if you're kind of hearing me how I'm talking right now, this was a perfect pot of just frustration and emotions to come out on this particular ticker for me. And so I was very frustrated. And so eventually, when we came back red, I almost thought to myself, like, I'm gonna just finally play with this stock and realize that when it goes right is not the time to short, it's actually the time to cover. So that's why I covered. I got out for break even on this reshort, and turns out I was right. It goes down a little bit lower, but then comes back green and actually squeezes. So I avoided this squeeze, saved myself from losing any more on this reshort, but did lose like $900 on this first entry. So just really, really frustrating. But again, like I said, some tickers will fit the setup criteria. But for whatever reason, the way they move, other participants playing in the stock, it just acts differently, and it acts in a way that you might not be able to handle it as well as you could. So that goes for that one. Next really good trade was RLFTF. We actually, me, Matt, and I believe Jack was on the episode. He might have been gone this week on the episode, but we actually did talk about this ticker, if it could break over this awesome 30 or 30 cent breakout. I think if we go to the intraday here, we'll see it. But we both mentioned, me and Matt were talking about, what if this ran to $1? How cool would that be? And that's exactly what happened, which was kind of cool that we kind of foreshadowed that, even though we had no idea. But going into this huge run-up day, I didn't want to chase it long, but I am now looking at potential short opportunities if it gets too extended. Now, I've talked about this before, where a parabolic short is kind of like an opposite panic dip buy, where if euphoria on the upside is too much, it's very similar to too much panic on the downside, where eventually it will turn, and when it turns, it usually gets ugly for the opposite side. So, looking at my trades here, I believe I have them right here. So you do see this parabolic, same as this intraday chart here. These are my trades. Let's make this bigger here. So I did take a small couple shorts into the first kind of big push, covered into this dip, and you notice how this is almost at the exact same level every single time, and that's because there was a huge hidden buyer at 55 cents. Just when you thought that this stock was going to break that 55-cent level, there was someone, I think with like 100 shares or like 1,000 shares, and he was just soaking, right? He was not dying, and so every time he wouldn't drop, he wouldn't get completely taken. I kept covering a little piece. And so I did have some left, though, unfortunately. I did have to cover when it broke back out over these previous higher or lower highs. And you almost could say that's a long, right? And I kind of wish I did long in a way. If this was a long, immediately, not even 30 minutes later, we're already into this huge run up. So this was actually also a good longing opportunity as well. And that's kind of why I got out. I knew at that point, I don't need to be in this. I don't want to be in this anymore. But then again, we spike from, in the 60s all the way up to 90s within minutes. And now I'm looking for the turn. And you can see here, I was actually early for a little bit. So that's why I shorted and covered very quickly. But then once we got up into the 90s, that's when a lot of selling started coming in. That's when the level two turn started to really shift. And then as we start going lower. And so we catch this beautiful panic. I start covering into the dip. We actually bounce again. I missed this long. This would have been a good panic dip buy because, again, like the parabolic turns to a panic. The panic then turns to another great dip buy. And I knew if this made a lower high, we were probably going to panic again, right? We all of a sudden, from what was a structured, more consolidated price action and then into this uncontrollable parabolic and panic, it takes a while for price action can stabilize again. So usually we see, a panic or a parabolic panic, parabolic, and then one more panic. And so that's what I was looking for, and that's why I did reshort on this lower high when level two turned to once again, and then covered again into the same levels that it previously was at before. I did miss this last one. I didn't really see that coming. So when I did see it panic, I was like, wow, this is much weaker than I thought. But again, after this happened, I wanted to leave it alone. And as you can see, we actually start to uptrend into the close. And then I actually wanted to, again, short it for the first red day. But on this day, there were actually no shares short. No one I knew could find shares. And so I had to watch this really just and missing it. I just had to watch it go fade down. And that's fine. Sometimes, it's not worth me having FOMO over things that I can't control. And this is one of those things. I could not control finding shares or short. No one I knew could. And so I just have to watch it. So that's okay. It's not the biggest thing in the world. So those were the main trades from week one here. Going into week two, the first trade that I want to mention is SRNE. This was a great overextended gap down on this main first red day. So if we go into the intraday here, and again, I talked about overextended gap downs before where I make money on them, but they're not something I get aggressive on, and I wish they were something I get aggressive on, because something like SRNE was a great overextended gap down play, but I struggle to figure out which ones are going to be great and which ones aren't. That's just how it is sometimes. I just have to accept it, right? I can't be great at every setup. Every setup can't be my absolute bread and butter. But you can see how great it was because, right out the open, we just panicked super hard. And I think I do have my entries as well. Yeah, we have this one. So again, red green is like between probably 1870, between 1850 and 18 or 19. And we have a great opportunity pre-market, right? It spikes right into red green. I believe I wanted to, and this is something about, I get a question all the time of do you short pre-market? And if so, how do you handle that? And I do short pre-market sometimes, but if I do, it's smaller size and it's usually wider risk. So when I shorted here, my first instinct is I want to risk red green, but I know pre-market, that's just not a good risk level. That could the stock could blow right back green pre-market, and then all of a sudden it's not an overextended gap down anymore, right? And that's the risk I take sometimes shorting these pre-market. And so that's why I usually only put on starter positions. That's why when I did short here, I actually risked much, much higher. If we look at the chart here, I believe I risked, yeah, one of these previous spikes here might have been like the 1930, 1940 level. So probably about $1 or more a share on a small starter position. And I told myself if we could spike out the open, I would much rather short and add size there than risking red green once there's more volume and there's more participants participating and recognizing red green as a particular level. And if that happens, then I will add more. But like I said, it's hard for me to read which ones are going to be really, really good, because this one was really good where I didn't have to really put any effort into this trade, right? Once I shorted, I was immediately green. Once the stock opened, I was even more green, and it just panicked. And so even though it was easy profits, it was also much lower profits than I expected, and then I should have probably be making on this type of trade, because I just never got to add size. I did end up locking in $1,200 on this trade, but for example, if this trade was something that actually gapped up and then failed and went red for the first time on the day, like actually broke red green during the regular market hours, this trade would have been a much bigger win. That is my bread and butter. That is what I am really good at, or much better at than overextended gap downs. But again, like I said, you really have to accept what the market gives you, and I did. I'm happy to make $1,200 on this and not miss it. So that is that. I kind of got less aggressive and didn't even think about shorting this midday spike. But obviously that paid really well as well. If you wanted to be patient, you could totally get another $5 to $6 of downside. So yeah, I missed that. But again, $1,200, not gonna complain. Just analyzing the trade to what I could do potentially better. And again, like I said, this is why overextended gap downs are always kind of something I struggle with, because there's so many times where I could add here and it's going to squeeze and I take a big, big loss. And there's many times where I could add here and it's going to work just like SRNE did and I get paid big. So it's a little bit too 50-50. It's a little bit too uncertainty for me. And so I don't generally like to do that. Next trade is LCDX, which is the big trade we will go over that happened on the 25th on this day, but that's actually not the day I'm talking about right now on week 2 of this month. It's actually this first red candle right here, which doesn't seem like a lot, but if you actually look at previous history, right, every time this has a big green day here and here, the next day it just gives it all of its gains back, right? And so I was trusting this previous daily chart to happen again. So when we had this big green day here, not even acknowledging, because then again, this is in hindsight. I don't know it's going to run to $6, but when I see this here, I'm like, okay, the next day should be red and it should give back all its gains, and so that's what I did. If we go to my entries, LCDX. So this is not a rare occasion, but a less often occasion on OTCs where it is an overextended gap down. Many times OTCs will usually open up at red green or they'll gap up. That doesn't mean they never gap down, but I think, at least in my experience, it's more common for them to open up break even or on a gap up than a gap down. But when they do gap down, I treat them the same way as NASDAQs. I usually will risk red green. Most brokers don't let you short OTCs pre-market anyway. Technically, they're not even supposed to trade pre-market, but using the route ARCA will sometimes get you filled. But anyway, so coming to the market open, I was waiting to get short, and I wanted to get short right out of the open, because something that is different about OTC overextended gap downs and NASDAQs is that NASDAQs typically will offer some sort of spike. OTCs usually don't. So out the open, I wanted to get short because I knew if it couldn't show any sign of strength whatsoever, it was going to panic, right? And that was kind of my thinking going into it. And so I knew if I got short, I would pick a position size that I'm okay with risking red green. If on the off chance it did spike, right, you have to think about risk first. I'm not just going to short and not think about what could potentially happen and go against my trade. But as you can see, I shorted right out the open, panicked right away, so I was right. Covered into these dips, and then offered a really great bounce. This short was actually a much smaller size than this one. I only got partial filled, like a couple hundred shares, but we immediately panic again. So I'm not going to chase and try to add more size. I'll just take what the price action is giving me. So I covered for a few hundred, or not even a few hundred. I think I made like $80 more on this small little size or partial fill. But ultimately, from this main trade, I did lock in, close to $2,500. So really happy with that trade, and really, this is a perfect example where experience pays, and knowing what to expect out of an OTC on an overextended gap, like seeing an overextended gap down on OTCs so many times is why this has paid me, because it's like I know what to expect, I know how to manage my risk, I know what I should be seeing when this stock opens, and I was down and right. So that was a really good feeling. That was a really good trade. I was happy about, and that was the main trades for week 2. Going into week 3, this was a pretty good lesson on GRWG, which is a lesson of not to pre-exhaust yourself when shorting on the front side. And so some tickers will be very choppy, will be very difficult to trade. And in my opinion, GRWG was one of those trades, or one of those tickers. And so what happened was I took 2, I wouldn't say bigger losses, because they were losses I was willing to take. But when it came time to actually size up and be right, I totally butchered it. I totally choked. And so I believe I have the trades. GRWG, yeah, I have all 3 of them. So going into this day right here on the 18th, again, like you said, if you look in the daily chart, if you want us to go back, it's multiple extended green days. We are perfectly overextended, and I am looking for the first red day. And so going into the 18th here, we actually have a pretty weak open. We try to morning spike here and fail. And so I'm looking to get short. This is a really great sign of weakness, especially being overextended. So I have to trust my plan. I have to trust my edge. So I do start getting short. And you see here, I'm starting to add into not great entries. They're a little bit, I wouldn't say chased, but they're a little bit lower than I would like. You do see me covering a little bit because I just felt slightly uncomfortable. I recognized how choppy this ticker was in the moment, and how poorly of a read I really had on it. And then we squeeze. And so kind of that subconscious, this telling me like, you don't really have a good read, Kyle, really ended up really telling me you don't have a read. And so I immediately covered. Now, in hindsight, we did chop around even more and fade, but we never went red. And I ignored it. I thought because we squeezed here, we're going to go much higher. And like I just said, not having a really good read on it, I kind of wanted to leave it alone. And so that's what I did. Because I was perfectly fine with just reshorting the next day on what would be hopefully an official green day, right? Because or an official red day, because we never went red. We just faded to red green and held, and then bounced into the close. So coming to the next day, again, we have a very similar circumstance where we spike and we fail. And again, we fail at once again, the low to mid 19s. So I'm thinking this is going to be a double top. I mean, you could almost say this is a triple top now into the 19 level. This will fail and hopefully finally go red. And so if we look at my trades here again, let's exit out this one. Again, you can see me here, I'm shorting the big spikes. A little bit early of an entry here pre-market, but again, like I just said with other stocks, it's a very small size pre-market, so this really didn't mean much. But again, we start basing in the 18s, and I thought because it hadn't squeezed like it had the day prior, it hadn't really given me a powerful squeeze like this. And I thought, okay, let me just be patient. As long as 19s keep failing, we should go red. But, as you can see, we don't. We then finally get that powerful squeeze to get over highs. And I'm glad I cut, because obviously we then start spiking, $2 to $3 a share higher. So between these 2 losses, I lost $750 for both, so about $1,500. Which again, $750 per loss is nothing big to me. That's pretty much a standard loss that I would take on this particular type of trade. But for whatever reason, I now felt very uncertain and not comfortable with now keep shorting this ticker with that much risk. Because to take a third time and lose almost $2,000 on a ticker is something I struggle with in terms of repetitive losses. It's one thing to accept a bigger loss on an individual trade, but it's something you have to think about how much drawdown can you take over multiple losses by increasing that size, right? I could take 3 losses of 200 each and be fine with a 600 loss, but would I be okay with taking 3 losses in a row at 300 and ended up being a $900 loss, right? You have to think about that, and that's something I've always been very conscious of going forward. And that's something I struggled with on this ticker, because I immediately thought, like, man, do I really want to take another close to $800 loss in this ticker? And so, unfortunately, when the time came the next day here, If we can load a couple little pop-ups here. There we go. So we finally gapped down. Okay, and again, like I just said, we're an overextended gap down. So there's a little mix of both. It was a mix of me tiring myself out on the front side, and then also once the time came, it was already a less ideal play for me personally, which is an overextended gap down. So if we go to the chart here, my trades, boom. So again, I short small size pre-market, and we panic right out the open. I immediately cover knowing that how choppy this ticker is, we should get a spike. Now, that could have been wrong. It could have been gone even lower, and I would have missed out on profits. But we do. We spike back, so I do take more size, or I do re-enter, and then we pull again. So these are great entries, and I finally had a good read on this ticker. But from exhausting myself on the front side, I took probably half the size I should have taken. For nailing it 2 times, over $1 share and then over another $1 share, you'd think taking the size I did on those losses, that this should be hopefully over $1,500 win or even $2 to $3 grand win, and it wasn't. I only made $830 from this whole trade. This and this added up to 100 or 830, which again is a bigger win than my 750, but like it's just not good risk reward. Like if I'm taking a loss of 700 on the front side, even if it's one loss, like my gain on the back side should be double or more, like minimum. So to take 2 $700 losses, and then finally when I'm right, I only take one $800 win, just pretty disappointing that I let myself get exhausted and get emotionally scared, I guess you could say, on taking another $800 loss, because really I should have doubled my size on both these puts. Like I really should have risked another 700-800 to this red green level, and I could have easily made another 2,000 to 3,000 on these particular plays. And even on this midday bounce, like I didn't reshort this midday bounce again, which would have been a great entry to even lower lows or new lows. So just a good lesson. It's something doesn't happen very often, but when it does, I have to recognize it, and it's a very good example and something for me to take going forward to really make sure I'm not exhausting myself on the front side, because the last thing I need is to not be ready and aggressive when the time is right, which unfortunately happened here. So next trade for week 3 was GLDLF. Now, I have talked about this before, but on OTC markets, it is a promotional ticker. If we go OTC markets, right, you can always go to the website to look up OTCs. I've probably shown most of you probably have seen me do this, but forever, there's always someone who hasn't seen every little piece of content I put out there, so I'll make sure everyone gets it and sees it. But if you go to otcmarkets.com, you can type in any ticker on the OTC. You can type in NASDAQ tickers if you want to, but OTC tickers are obviously going to have more information. You type in GLDLF, hit enter, and then it's on the right side here. It's going to show you pretty much not everything, but information you'd like to know. And so the first one you see is stock promotion. I don't have an article or the email that's going out on this ticker, but OTC Markets does, and they've seen it. So someone is promoting this stock. That doesn't mean this is a scam. That doesn't mean this stock's going to zero. It just means there is an incentive someone has out there to get this stock price up, and that's probably likely why this stock did go up a few days in a row. And so I did short it. I did make a little bit of money. Let's go on the intraday here. And I specifically chose this trade because it complements LCDX perfectly, where this was an extended gap down on an OTC that didn't work initially. So if we look here, we actually gapped down. So the previous close was 268. We open at like 265, and so I'm going in with the same game plan as I do with LCDX. I'm going to short the open, expecting a panic, risking red green. And so if you look at my trades here, see I short out the open, and there was a huge bidder at 260. I mean, I forget how big he was. I think he was like 300K worth of shares. Like someone wanted to buy a lot of shares at 260. And I immediately saw that. So I actually canceled half my orders. So I actually luckily only got filled half size here. And I was really happy I did that, because me and everyone else recognized this bidder is huge, and we squeeze. We immediately go back green. I cut it, I cover, and I think we're actually going higher. I remember taking a long in my E-Trade account, and actually quickly needing to sell and take a small loss because I realized this was another fake out again. They faked out both longs and shorts, which is why I then did reshort, which I'm happy about. This could have easily turned into a ZVO example where we just want to go back red and green all day. But more times than not, I do want to trust this. Again, like I said, if you look at the daily chart, we're extended. It's a motion. There's incentive for people to get rid of their shares or for the stock price to be high. So at some point, people will sell. And so I do reshort. I do help chip through this 260 bidder. Now, to say I helped is a massive understatement. Like, obviously, someone else took the majority of the 300K shares, but I shorted a couple extra thousand into the 260 level as he was getting chipped. And then we start panicking, cover a little bit here, and then finally into the main panic, cover the rest in the 230s. And I'm pretty happy with the trade. I ended up making $1,300 after the loss here, so I probably really made like I think 17 or 1800 on this trade, but lost about 400 or 500 here. So just a good example of an overextended gap down on OGC that didn't work, but then sticking to your plan, and when it shows you what you want to see again, then it works really, really great. Last ticker before I go over the LCDX trade was BRTXQ. So something I did do this month is I did refund my E-Trade account to start longing some of these lower price stocks. I do a video about maybe over a year ago about how I'm really bad at longing these breakouts. I can have it pop up here. I'll put in the link in the description. But essentially, the way I wanted to play breakouts was really, really bad, or I'm not really good at them. And I thought, having an E-Trade account wasn't for me, but I realized there's a certain particular type of play that I look for that I am good at. And to play these lower price plays, I just need an E-Trade account. My brokers, that other brokers I have, are just too expensive commission wise, and I need a broker that charges very cheap commissions and for orders, not for amounts of shares I'm buying. And so that's what E-Trade is. And so BRTXQ, it broke out. Now, the type of play I look for is not the initial breakout. I'm 9 out of 10 times, I'm not good at that type of play. I will usually lose money. But a particular play I am good at on the long is what happened on this particular occasion, which is when it proves the breakout and the next day it runs. And on that next day it runs, it holds red-green. So if we look here on this breakout level, so the breakout level is what? It's like 1.415, right? And we break out. But again, see how initially it doesn't break out through that level, right? It chops below it, it chops underneath it. And this is where I struggle, right? I don't have the patience most times to really ride through this choppiness and really let the breakout work. I much rather it prove itself to hold and then look to long. And so I wasn't longing overnight. But what I wanted to see was, can it hold green? And if it can hold green, will the breakout continue? Because if it will, I would love to long. I used to do this all the time when I was under PDT. Except when I was under PDT, I would actually I wouldn't say gamble, but I would take a bigger risk by longing overnight to save a day trade and then risking red-green the next day. But now that I'm over PDT, I don't have to take that risk. I could just wait for the morning to potentially see if it